The moment silver touched $71, something felt wrong. Not just surprising, not just volatile, but wrong in a way that makes your stomach tighten. One day, everyone was talking about silver as the next unstoppable breakout, and the next day it felt like the floor vanished beneath it. Prices didn't drift lower. They were shoved down, forced down. And if you're sitting there wondering how silver could fall that hard, that fast, you're not crazy. What happened wasn't normal market behavior, and in the next few minutes I'm going to walk you through exactly how the rules changed, who benefited, and why this drop was never about silver suddenly becoming worthless. Stay with me, because this story isn't about charts. It's about control, timing, and power. Before we go any further, take 1 second to like this video and subscribe to Elite Capital Decoded. It genuinely helps the channel grow, and if you care about understanding what really moves markets instead of reacting after the damage is done, you're in the right place. Let's rewind to the setup, because this didn't come out of nowhere. Silver had been running hot. Not quietly, not slowly, but loudly. Industrial demand was exploding. Solar panels, electric vehicles, electronics, defense systems, silver was everywhere. At the same time, inflation fears weren't fully gone, debt levels were climbing, and trust in currencies was fragile. Silver wasn't just rising in price. It was sending a message. And when a market sends a message powerful institutions don't like, history shows us the response is rarely gentle. As silver pushed higher, leverage piled in. Futures markets got crowded. Retail traders chased momentum. Funds stacked positions. And physical silver started trading at premiums that didn't match paper prices. That gap matters, because it signals stress inside the system. When physical demand pulls away from paper pricing, it exposes how fragile the structure really is. That's when alarms go off behind closed doors. Then the rules changed. Margin requirements were raised. Quietly at first, then aggressively. That one move alone forced leverage traders to either add cash immediately or liquidate. Most couldn't add cash, so they sold. And when selling starts under forced conditions, price discovery disappears. This wasn't buyers deciding silver was overvalued. This was sellers being pushed out regardless of price. Silver didn't fall because people stopped believing in it. Silver fell because they made holding it more expensive overnight. And once that domino tipped, everything accelerated. Stop losses triggered. Algorithms kicked in. Liquidity vanished. What looked like panic was actually mechanics. Cold, emotionless mechanics. Silver sliced through levels that should have held because nobody was allowed to defend them. This is why the $71 level matters so much. That wasn't a natural resting point. That was where forced liquidation finally ran out of sellers. And here's the part most people miss. If this move were truly about fundamentals breaking down, you would have seen confidence explode elsewhere. Stocks would have surged. The dollar would have rallied cleanly. Risk assets would have celebrated. Instead, what we saw was hesitation everywhere. Fear didn't disappear. It just changed shape. Silver didn't expose weakness in itself. It exposed weakness in the system. This exact playbook isn't new. We've seen it before. In 1980, when metals ran too far and threatened confidence in the dollar, the rules were rewritten overnight. Margin hikes. Liquidity cuts. Forced collapses. Not because inflation disappeared, but because control needed to be restored. What happened to silver recently fits that pattern almost perfectly. People love to call this manipulation, and while the word makes some uncomfortable, the truth is simpler. Markets aren't free when they threaten narratives. They are managed. Perception is protected. And silver screaming higher was telling a story that didn't align with stability, strength, and control. So the system pushed back. And it worked. Retail traders were shaken out. Late buyers were punished. Confidence cracked. That's not accidental. That's redistribution. Weak hands out. Stronger hands wait quietly. Now let's talk about why this matters going forward, because this is where most investors make the wrong decision. After a move like this, emotions flip. People swear off silver completely. They say it's rigged, dangerous, unpredictable. And that emotional exhaustion is exactly what resets markets. Silver doesn't need hype to move higher long term. It needs boredom. It needs people to stop watching it every minute. That's when accumulation happens quietly, not loudly. Does that mean silver immediately rebounds? No. And that's important. After forced liquidations, markets often chop, frustrate, and grind. That's how confidence is rebuilt. Slowly, painfully, without excitement. This is why chasing silver right after a crash is dangerous. Not because silver is dead, but because the system just proved it can change the rules whenever pressure builds too fast. Patience becomes power here. At Elite Capital Decoded, the goal isn't to hype tops or scream doom. It's to help you understand why moves happen the way they do, so you're not reacting emotionally after the damage is already done. Markets don't reward outrage. They reward understanding. Ask yourself this. Did debt disappear overnight? Did industrial demand vanish? Did governments suddenly become fiscally responsible? No. None of that changed. Only positioning did. Silver wasn't rejected because it was wrong. It was rejected because it was early. And now we enter the most dangerous phase. The quiet phase. The phase where nothing exciting happens, where price drifts, where people lose interest. That's usually where long-term positioning begins. Before we wrap up, I want to hear from you. Do you believe silver was deliberately forced lower? Or do you think this was a necessary reset after excess speculation? Drop your thoughts in the comments. And if you know someone who's confused or angry about what just happened, share this video with them. Understanding is always more powerful than emotion. Stay calm. Stay patient. And remember, markets don't reward panic. They reward preparation. Thanks for watching.